The next one we're going to be talking about is Exxaro, which is primarily a coal producer with extensive operations delivering steam coal for export and power station coal to Eskom. In addition, it has a significant minority interest in the Sishen Iron Ore mine and some smaller, heavy mineral interests. Exxaro has a market cap of 21 billion rand, a price-to-earnings ratio of 6.86 and a dividend yield of 4.5%. So all these PEs that we're looking at, these are obviously historic because the forward ones don't look as valuable in a sense because the commodity prices have come down so much. So Exxaro, operationally a big coal producer, that's what they do on a day-to-day basis, but historically the big bulk of their profits actually coming from that Sishen, that stake in the Sishen mine, which has been great for them, and then they've used the profits from that to invest elsewhere. Those investments not going so well.
Not at the moment. What I do like about Exxaro though is it's committed to focus on coal. They've seen that as their strategic advantage, and they're really going to put a lot of efforts behind it. They're cutting capex everywhere else and focusing on coal. So I like that. I think coal's weathered this rout in commodities a lot better than most. And I think, you know, with the power generation application of it, there is quite a stickiness to the demand for it. So yes, I like where they're heading. Are they still in for a tough ride? Probably. You know, they're not going to escape this. We've already seen earnings really get smashed, 60% lower. Dividends are getting cut, as we say. So, you know, the picture looking forward for all these producers, Exxaro included, is a lot worse than maybe those numbers have indicated that you read out there.
Let's have a look at the graph there. Similar picture to the rest, following the downward trend in commodity prices. I guess having those big contracts with Eskom is a good thing, but there's also some risks. We've seen Glencore with Optimum Coal have some issues with the pricing and so on. In terms of pricing of coal going forward, you know, there's a lot of talk about alternative energy, shifting to solar. Coal is a very much hated power source because it's extremely dirty. You know, your long-term view on the pricing of coal and Exxaro's sort of pricing power to be able to sell that product?
Yeah, I think in terms of pricing power, it will always be limited, particularly if you've got one or two big players. I do think, though, that coal still has a very important part to play in power generation. It provides a lot of the base load that its clients and customers need, and that can't always be provided effectively by alternative power sources. So, yeah, I mean, I do think there's an underpin of demand in the commodities. Interestingly, you know, you spoke about book value. You know, Exxaro's came out in their last results stating that their assets are worth almost 50 billion. We're sitting at a market cap of low 20s. So, you know, for the value investors out there, there is definitely a compelling case, but the risk is still elevated at this stage.
Having said that, though, they had to write off the assets in the Republic of Congo by about 5 billion rand. So that has been very tough, you know, no infrastructure there. It's not easy to operate in those regions. And then, of course, the iron ore price coming down, which hasn't helped or not.
Yeah.
Hot or not?
Not hot for me, Byron.
Not hot.
Yep.
Again, agree with you, Devon.